Welcome, everyone, to the Long-Term Investor. I'm really excited because with me today is Caleb Silver, Editor-in-Chief of Investopedia and the host of the Investopedia Express and the Green Investor podcasts. Caleb is an award-winning journalist who previously has worked as the Director of Business News at CNN, the Executive Producer of CNN Money, and a Senior Producer at Bloomberg Television. He's a frequent guest on CNBC, Fox Business News, MSNBC, Yahoo Finance, and ABC Radio. Caleb is also the president of the Society for Advancing Business Editing and Writing, the oldest nonprofit business journalism organization in the country. Caleb, thank you so much for joining me today.
My pleasure. I'm happy to be here. I'm a big fan, Peter.
Well, I've been excited for this conversation for some time, not only because you're one of the leading financial journalists today, but also you have a really unique perspective on markets and consumer trends. You also have some access to some pretty unique data that we'll definitely dive into as we get along. But I have heard you on other podcasts before. I certainly listened to yours, and I always find that the way that you got into the media realm is pretty interesting. So maybe start us there. Give us a little background of how you started and how you got to where you are today.
Yeah, I'm an accidental business journalist, but 25 years into the game, it's really not an accident anymore. But I was a restaurant guy. I grew up in Santa Fe, New Mexico, which is a good restaurant town. I was cooking, I was managing restaurants. And then I started to teach myself how to become a documentary producer. And I bought a TV camera. I started stringing for news. I traveled throughout Central and South America doing environmental campaigns. And when I eventually made my way back to the States, the internet bubble was really popping, and I wanted to go to journalism school. So I went to NYU Journalism School for my graduate studies and started interning at Bloomberg TV when Bloomberg TV was just beginning. And they really were just throwing things at the wall. And I knew how to shoot and edit, and I was coming out of J school pretty hot. So I started interning there, and that was just as that bubble was getting really frothy. And, after about a year, I was hired there to produce sort of a technology and internet based TV show. Now, it was a TV show for Bloomberg about internet stocks, AOL, Yahoo, Pets.com, etc. And then that bubble burst. So I was front row seat watching the internet bubble burst, learning about investing, coming from a restaurant and documentary background, and all of a sudden thrown right into the belly of the beast as the internet bubble blew open. And I was reporting on it front and center with Bloomberg, which for me was like going to business school. Working at Bloomberg was really intense, and you really have to know your game. And I learned it real fast there. And that's how I got into business journalism.
Well, and you certainly do know your game. And since you've been at the helm of Investopedia, it's become the go-to destination for people looking for financial information. So maybe you could give us a little background of Investopedia as a whole and how things have changed over time, including your role there today.
Yeah, sure. Well, maybe I've made it a little bit more famous, but Investopedia is 23 years old, Peter, and 23 in internet years is like 230 in real years. So we were a 1.0 internet company started by 4 Canadian guys in Edmonton who had this idea because the internet bubble was getting pretty frothy in the late 90s, 1999, they said, what if we put a dictionary of these financial terms online? Because CNBC is just starting out, Bloomberg's out there. They're just talking about these terms like earnings before interest depreciation, EBITDA, or growth rates or compound annual growth. And these are not in the common vernacular. But what if we put a dictionary online? Because we think that there's this company in Mountain View, California called Google that's trying to index the internet. If we put the dictionary up, maybe they'll point to it. Well, that turned out to be a really solid idea. And then these gentlemen decided to add test prep for the Series 7, Series 63, all the series exams to get into banking and into finance and investing. So they created that destination. And from there, they sold it eventually to Forbes. Forbes had it for a few years. Eventually, it wound up in the hands of IAC, Interactive Corp. And we're still owned by Interactive Corp, but we do have a parent company above that called Dotdash, which you might know as About.com. About.com was rebranded as Dotdash about 6 years ago, and now we have about 13 sites, including Investopedia. We're part of that family, but owned at the higher level by IAC. I joined Investopedia about 6.5 years ago to be the editor-in-chief and the head of content because, like a lot of people, I grew up on the site. It helped me learn business news. It helped me learn about the game, and I relied on it. And I said, wow, they're looking for someone to really steer the content ship there. It's been so valuable. What can I do to help it grow, and what could I learn from being there? And it's been a fast ride ever since, but we've grown in traffic, we've grown in users, we've grown in, I think, in brand, and I think a lot of that is because There are so many people who are actively investing right now or getting into it for the first time over the last few years, and we've been the place that people come to when they're trying to learn.
Well, and there's no doubt that once Google recognizes the place that you tend to go after you've searched for it once, those places tend to come up first. So when anytime I search any sort of term related to finance, I always see Investopedia on the first page. But your role as editor in chief, I'm not sure a lot of people know exactly what that means. And for an outlet like your own that is doing so much beyond just the publishing of basic financial information, I imagine it entails quite a bit. Maybe you give people a better idea of what does Caleb Silver do day to day, quarter to quarter, year to year.
Great question. Well, I'm the editor-in-chief, and it's a super honor because so many people thank me for Investopedia. But like I said, I joined it, in the last 6.5 years, and it's been around for quite a while. But my role is very unique in Investopedia. I'm kind of responsible for all of the content. I'm the last word on content, but it's not as if I go through every one of our 36,000 pieces of content. We have a really strong editorial team made up of editors and senior editors that run verticals like investing, verticals like trading, retirement, financial advisors. They're responsible for those, the economy. But I'm the last word editorially on voice and on brand. I'm more like the brand spokesperson in that you'll see me, as you mentioned in the intro, on television, on financial news. You'll hear me on the radio. I have a couple of podcasts. I'm here on your podcast. But I am sort of the explainer in chief for the mass media world. When things are going on in the economy, I go on NBC every Friday and talk about what happened and how you need to think about it. And I'm also, I think, the voice of the educated investor. I'm not an expert. I'm not an expert trader or an investor, but I am an expert at learning about investing and then teaching people how to do that. So that's the role I take on, the explainer in chief, but also the educated investor. That's who I'm speaking to. That's where I'm speaking from. So I'm brand. I'm more about the brand than I am about, making sure we have traffic. But you mentioned the fact that anytime you Google something or use a search engine on a financial term, you come to us. It's not an accident. We've been around for a long time, but because people link to our definitions and refer to them all the time, it's that backlink juice that helps you keep those results strong. But that's not an accident either, Peter. We spend a lot of people power, a lot of money, and a lot of resources updating and improving our content every day, all the time, because getting to number one is hard. Staying number one is even harder, and that requires making sure that you keep updating your content, making it fresh, making it smarter, and investors are getting smarter all the time. So staying with them or ahead of them, that's the name of the game in this business.
I imagine a lot of my followers don't realize how much effort I myself put into making sure I get some of that search engine juice, as you mentioned. And I love that you said explainer in chief. And as I think of the ways that other people are linking back to you, I know I myself link back to you when named to your Investopedia 100 top financial advisors. And so grab 100 financial advisors who are all highly prominent linking back to your site. That certainly is going to give you a little SEO juice. But I'm just kind of curious. That's an award that I believe has been around, or recognition, I should say, for maybe 6 years. Maybe that started right when you get there. Now that I'm thinking about the timeline, why was that list started, and how has it changed? And what's a common theme you're seeing among the advisors who are included on that list?
Well, first of all, congratulations for being in the top 10 of the most influential financial advisors in the U.S.
Thank
That's a big deal. You know the people on that list, probably
I
all
sure
of them,
do.
if not most of them. And there's a lot of people that are pretty close to that list that are also super influential. So you're right. We created that when I got here. We were looking for a way to celebrate financial advisors. We are of the belief, and I'm personally of the belief, that if you can have a financial advisor, if you can afford it, or if you can afford the time to work with one, it's probably the smartest decision you'll make, right there. You are the guiding lights of our industry that really help people make sense of their financial lives. It's not just about asset allocation, as you know. It's the holistic life planning, and my life improved a lot when I got a financial advisor, and I think I know a lot about this. So I'm really into that. I wanted a tentpole and a way to celebrate them in a way that was different than what I saw in some of the other publications, and I have a lot of respect for all of them, but it's really not for us about assets under management or client turnover or how much you've grown your business per se. It's about how you're using your influence to help people, to spread the gospel of financial literacy and education, to help your fellow advisors navigate the industry, to help the overall world understand the importance of financial advice, financial planning, and then who in that list of 100 that we do every year, who is sort of referring to you, who's amplifying your message. That's a true sign of influence. So those are the criteria we look at. Who's using their platform most effectively to educate and help people, because that's what we're all about. But also, a big part of the Investopedia 100 is nominations from other advisors who are actually nominating, you in this case, or anybody in that top 100. The more nominations you get and the more backlinks and retweets and amplifications of your message by your fellow advisors, that really raises your influence. So that was really, for us, it was about the spirit of education, the spirit of helping people, and also using the influence of the platform. When you look across that list, there's some famous people there in our world, right? In our world, these are the stars of our industry in some cases, but there's also some folks you may have never heard of, but they're using their platforms to amplify and educate, because that's what we think is the most important thing when it comes to this.
Well, I have to tell you, I appreciate that you have the list. I'm obviously extremely appreciative to be listed in the top 10. When I read the email from you, I thought I was reading a mistake, to be honest. And one of the reasons this list is so important to me is that I remember when I was younger and working with clients, and I felt like I had so much knowledge and there was no way to share it with people. And today, this podcast, my blog, the videos, the presentations, the book, all about spreading that message a little more broadly, because I've worked so hard to hone my craft that I want to be able to share it. And financial advice is not cheap. I have a few episodes of the podcast that's talking about financial advice and how to choose the right person. I think it's a great investment. I have an advisor myself. I'm naturally biased in thinking it's a great investment. But for those who aren't able to make that commitment, the internet has really introduced a unique way for us to speak to the masses. And again, I'm very appreciative of the work you've done to highlight some of the people who do a absolutely tremendous job of that. And it's, I think, just one of the many examples of how Investopedia in general is innovating. I'd mentioned at the top of the episode, you have some access to really unique data. And there's one index in particular that I think is fascinating, which is the Investopedia Anxiety Index. It's a gauge of investor sentiment based on the behavior of the tens of millions of readers that you have. Could you go into the origins of that index and maybe explain how it works and maybe even what it's telling us today?
Yeah, I'm fascinated by this too. And this is so unique to Investopedia because people don't walk in the front door of Investopedia.com. Nobody's coming to the homepage and starting a browsing journey. I mean, maybe, geeks like me do it, but most people are coming in the side door, the back door, the roof, the attic, because they're searching for something, right? We have that intent. We know what people are looking for because they're searching for it. And they're coming to us via a search engine about 90% of the time. Well, knowing that and knowing what brings them in shines a big light on what they care about, what they're worried about, what they're optimistic about, where their sentiment is. So after the financial crisis in 2008, 2009, we realized, and I wasn't here at the time, but we had a couple of data scientists working on this who realized that there was a very powerful message coming through when we started to look at what were the most active search terms on a given day or given a period of time. So obviously during the financial crisis, you had a lot of things like mortgage-backed securities and credit default swaps and recession and bankruptcy, right? These were fear-based terms. So when I got here, we honed this a little bit more and realized that there were about 13 or 14 real fear-based terms that people search for when, the blank is hitting the fan. So that could be markets related, and that could be bear market, that could be correction, that could be circuit wire, tripping a circuit wire, or halt in trading, or it could be economics related like recession, depression, GDP, or it could be personal finance related. So bankruptcy is a good one, foreclosure is a good one. When people start searching for those things, they're worried about something because that's not an idle search. Yes, you may see an Econ 101 student doing that search, but when you have thousands or millions of people all searching for the same thing and then looking at the galaxy of other content that they're engaging with, once they've come to that term, you realize that there is something going on there. And what we realized, which was fascinating to me, Peter, is that the anxiety, so we created this index of these terms which tracks the traffic into these fear-based terms. And what we realized when we started studying it, and we did a little work with a hedge fund on this, is that it moves, the anxiety index, before the VIX moves, right? Why? It makes a lot of sense. People get fearful, they search what does that word mean, and then they go and do something about it. Now, professional traders or investors don't need to look up what a recession or a bear market is or a correction is. They know what that is. But the masses that follow those professional traders, they are looking that up. So when they're saying, when they're watching financial media, or they hear something on the radio, or they hear a podcast like this, and they say, what is he talking about? Leverage is at an all-time high. Then they go and look up leverage. We get a lot of people looking at that. That makes a spike in our anxiety index, and it moves before the VIX, which means it's kind of like a market indicator. Although we don't promise you can make a better investment of it, it's just a great way to have your finger on the pulse of what people care about. So we've developed this index over time, and we've been tracking it since 2007, I believe now. We have a lot of data, and we're able to see what that vibe is. What's the temperature of investor sentiment? And it's super valuable to us because then we know what to update in terms of our content, but we also have something to talk about that I can go out there and talk about on CNBC. We feel like we are the voice of the individual investor because they're coming to us to learn.
Well, and tell me, what is it that you're talking about as it relates to this indicator today? What would you say the temperature of the individual investor would be?
Well, at the end of November here, the markets are getting a little sketchy. That's when we're speaking. So the temperature is pretty high right now. People are anxious. They've had investors have had a pretty good year, a year and a half, I should say, ever since the depths of the spring of 2020. And it's been super mellow, almost hibernating through the fall. But in the last few weeks, if we had this volatility and a new strain of the coronavirus, coming to the fore, people are very anxious again, and they're starting to think about selling. They're starting to think about what would happen if the market were to go down 5-10%, looking at their threshold for how much they can take. So there's a lot more anxiety today than there was a few weeks ago, but it has been a very quiet year as the market has slowly ground higher. Now you have those days when volatility spikes and everything starts to move and people are looking into that. But in general, it's been quiet, but it's awake now, and it's like a 2-year-old in a toy store when it's time to leave, starting to scream a little bit and not very happy.
That's great. And since the pandemic started, it seems as if there is a new wave of investors that have shown interest in markets, in individual stocks, in cryptocurrency, in non-traditional assets. How has that impacted things like this index, or even just the traffic and the user behavior on your site?
As you can imagine, we have about 18 to 20 million new investors that joined the stock market in the past year and a half as market participants. And this was amid the pandemic, and there wasn't any sports to bet on. You've heard all the stories about why people got into the market. So that's been happening. And as that's been happening, our traffic grew commensurately with that. We had a lot of interest, especially around the meme stocks, especially around crypto, especially around NFTs, a lot of these new riskier asset classes. That's where a lot of these new investors are sort of dipping their toes in the water, and we're feeling that traffic and we're feeling that interest in all of these themes. One of the best things that we did back in 2014, 2015 is we started building a library of cryptocurrency content. This was when Bitcoin was probably about $2, and we weren't really talking about it that much. But we had an editor at the time who was very into it, and thank the Lord, she built a pretty good library of terms that we've added to over time. So crypto has always been a very high traffic area of interest on our site. And whenever we get spikes or drops in it, we get a ton of traffic to it, and we have some really good terms on it. People start their education process with us in a lot of cases. So crypto has always been a very stable source of traffic and interest from among our readers. But you can imagine with meme stocks, and then the short selling of it all, the short squeeze of it all, the bear hugs, all of those terms really brought a lot of traffic to our, a lot of interest to our site, a lot of people reading that for the first time and understanding it. And that's where I think we're really valuable to folks who are just like blown away with what is happening out there in the markets. They have no explanation for it. Then they start to read into it a little bit, makes them a little bit smarter, and hopefully they make smarter decisions going forward.
Well, and if someone were to run into you at a party and they didn't know who you were or what your background is, and they're talking about investing in a sort of social way that I know undoubtedly you run into because I know that I do, and they're talking about maybe not even just meme stocks, but in the news individual stocks, and they're talking about trades they've made in their portfolio. What is it that you try to communicate to those people if you're not going to tell them who you are, what your role is? What sort of ways are you nudging people towards information? What sort of questions are you asking them? Because you can never change somebody's mind in a single conversation. I always find myself tiptoeing around it and trying to offer good advice, but not being a parent or a grandparent about it and scolding someone for their behavior.
Yeah, I put on the journalist cap and I start asking a ton of questions, nuanced questions that only a savvy investor or trader might know. And I think they become surprised by that. And they say, wait, are you an investor? Are you a trader? Do you work in finance? And the answer is no, I'm the editor of Investopedia. Yes, I do work in finance, but in finance education. And this brand, it never ceases to surprise me. I get letters from people all over the world and emails and DMs of people thanking me for getting them through graduate school or getting them through their first job or acing an interview. And I'm thankful too. It helped me do a lot of those same things. So I ask a ton of questions, and out of the gate, people are like, "You're different. You know more about this than you look like you should." Or maybe I look like I should, but
I think you look like you should know something. Yeah.
Than they expect, and then we get after it. But you know what I find most of the time, Peter, is that even here at Investopedia, we're all about financial education. Some of the people that work for us aren't invested. Yes, they have a 401k. Yes, they may have a brokerage account, but they start and they don't continue it, and they don't continue that lifelong learning journey of financial education and literacy, and then putting themselves on the faster path to building wealth. And it's not all about getting rich, as you know, but it's about how can I make my money work for me, and how do I participate in this system that's going to allow me to make some money over time so I can buy my time, which is, I think, what the goal is here. It's not so I can retire at 60. What's retirement? It's just buying your time, the ability to afford it. So that's what I try to do a lot. And I get that around these halls and Investopedia, people I work very closely with, but I also get that out in public where people are like, yeah, I have something. I don't even know what's in my 401k. And then I start to say, well, are you invested in the stock market? Are you invested in growth stocks? You're 32 years old and you don't know where your money is. You have 30 to 40 more good years of investing. Let's get that together. And usually folks are open to a conversation after that.
Well, if we're out in public these days, that means things are good as we're still living through the different cycles and phases of the pandemic. I know that recently you published an update to your New York City Recovery Index. And New York being the financial capital of the world, I can see why this index garners some interest. What's the latest that indicator is telling us in your perspective?
Well, I'm here in New York City, and you can just walk out on the street and the number, and I'll tell you more about the index. You feel like we're about 75 to 80% of the way back to where we were pre-pandemic, just on the street vibe. But last summer, or the summer of 2020, as we were sort of emerging from the depths of the worst of the pandemic at that time, I had one of those shower ideas where I said, you know what, we should be tracking the recovery of New York City, because we're based here, and I bet New York One, which is really into the feel of the city. This is our local cable channel that a lot of people watch every morning for weather and traffic and the headlines. I bet you they'd be interested in doing this with us. So I approached I have some friends over there, and I said, I've been thinking about creating this index that tracks subway usage, restaurant reservations, COVID hospitalizations, weekly unemployment, and the real estate market, both pending sales and the rentals and vacancies. Let's track with those variables. Let's see how New York is doing. We'll put a score to it. So we started doing that week in, week out, and I will go on New York One with an update of what's happening in the New York City economy based on that score. And it's become a branded segment that's on every Wednesday or Thursday on New York One, where we're really giving people putting a number behind the economic real feel. Now, it feels different to everybody. Somebody on Park Avenue with the house out in the Hamptons feels like things may be all the way back. But somebody who may be living in the South Bronx, working 2 jobs just to get to make ends meet, doesn't feel that recovery at all. So we tried to find some of these areas where everybody experiences New York. Everybody pays rent or pays a mortgage of some degree. We all eat. Either we're going out or we're bringing in, right? COVID hospitalizations are what they are. We can track those every week. This is publicly available data. And the point of doing this was to track the recovery, but it's also to get people to think about Investopedia outside of what everybody knows us for. So we're really good at data, and we're really good at data analysis and storytelling from that. So we created that with New York One. I've created something similar with News 12, which is a local cable, regional cable around the New York, Connecticut, New Jersey areas. And I do this for a bunch of other networks as well, where we're giving people a different way to look at what's going on in the economy, because we all know the jobs report comes out on the first Friday of every month. That's backward looking. Consumer sentiment is backward looking. So we're trying to find things that are a little bit more front and center to create indexes around and then storytell around. And that's a big part of what I do as well.
Well, as I mentioned multiple times now, the information and data access that you have is really fascinating. And I think the place where I'd be most curious to see aggregated data at some point is that from your Investopedia Simulator, which is an idea I absolutely love. For those who are not familiar, the Investopedia Simulator allows you to create a mock portfolio where you're placing trades and they give you real-time performance. Perhaps, Caleb, I should be letting you explain it, but tell us a little about that and how it started and what you're seeing from it these days.
Yeah, well, you were doing just fine there, Peter, so I would just let you keep going. But it is a paper trading simulator. It's a free stock simulator that we created about 10, 11 years ago. Pretty simple code, to be honest with you. But you have to plug in a markets provider with close to real-time data. But we do let people build portfolios and start games. And you can trade stocks and you can trade options. We're introducing cryptocurrency finally to it. So you can trade cryptocurrencies, and it allows you to trade harmlessly without losing any money. But you can also create games, and you could create them with classmates, friends across universities. We know several universities use us on their investing teams. We know, for example, several countries use us inside their investing clubs. So we get these notes all the time from Barbados and Jamaica and other people who are they're using our simulator to create their own tournaments. And it's a great way to learn how to trade and how the market works without losing real money. Turns out it's also a pretty good off-ramp if you want to sign up for a real broker once you've learned how to trade for the first time. And in that simulator is not just the ability to buy and sell stocks and options, but also it has pop-ups where you can learn what things are. Oh, that's a straddle, or that's a cup and handle pattern, a technical analysis pattern. We're trying to educate as we train people to trade and invest for the first time. And tens of thousands of people, new people, Peter, come into that simulator every month and start up a new game. So it is this constant flow of new traffic and new visitors who are learning to invest for the first time. If you Google, free stock simulator or paper trading or stock simulator, you're going to find our simulator there and one of the top 2 or 3 results. And so many people come into that. And I can't tell you how busy that was in the past year and a half as people wanted to start because they had that FOMO. They saw these meme stocks, they saw cryptos, and they're like, I got to do this, but I don't want to get burned. And a lot of people came to learn for the first time. We just redid the simulator. Even more people are coming in right now. But you're right, it does give us valuable data. We know what the top stocks are. They're not that different from what you might think that they are. We know what the top types of trades are. Is it a swing trade? Is it a market order? Are people putting stop orders in and limit orders in? We also know what they're doing in the options market. And if you put if you put that overlay over the actual market, it wouldn't be all that different because people want to do what other people are doing. But here they're doing it in a harmless way that emboldens them to then take the step, sign up for a real account, and begin their investing journey.
This is such a cool tool. I'm going to be sure to link to it in the show notes, along with all the other resources that we've mentioned throughout the show. So again, go to thelongterminvestor.com to check those out. Just a few closing questions that I ask all of my guests as we're talking about investing simulators. If I'm asking Caleb for real investing, and be as specific or vague as you'd like, Caleb, how do you invest your own money?
Yeah, well, as I said, I have a financial advisor now, which was the smartest thing that I did. But I realized early on in my career, even though I was steeped in business news and following the markets, that I'm a terrible trader. I'm a terrible gambler too. So I started trying to trade thinking I could outsmart the markets because I just listened to this smart person or that smart person, or I had the instinct, and I promptly lost a lot of money. I'm famous for having bought Lehman Brothers, right in the teeth of the financial crisis in 2008 when I saw that stock down at $20 a share. I said, there's no way Lehman Brothers goes out of business, and I heavied in, and that hurt. So I stopped doing that, and I went into index funds and I went into ETFs, a couple of stocks on the side here or there, but I am the editor-in-chief of a site, and I've been a business journalist, so I don't like owning individual stocks, even though I'm tempted, because I got to go write about them or I got to go speak about them. So in my own personal portfolio, you won't find any that I manage. My advisors might manage a portfolio that has them, but I don't. All I told them is, what I want and what I don't want in terms of ESG or SRI. I didn't tell them what stocks to pick. So you'll find me deep in the ETFs, and I love ETFs just because there's so much variety right now, and they're affordable. and index funds, which I started out early enough, in that last crisis when I saw interest rates go down near zero. A couple of smart people said, get in and back up the truck. So I went in heavy on the index funds, and that's what I do. I started custodial accounts for my kids that are built around some of the same themes, and my nephews. So that's how I personally invest, and I'm a dollar cost averager, and I'm not a market timer. I may wait a little bit, like I'm not going to invest when the market is super choppy, but I try to be pretty regular about it, and I try to automate it so I don't have to think about it. So I know every month I'm kicking a few $100s into my kids' custodial accounts if I can, into my own portfolios if I can, dollar cost averaging to where I believe, where I'm comfortable, and also rebalancing probably twice a year. I should probably do that a little bit more. The last couple of years I really haven't felt that compelled to do it, just watching the markets doing what they're doing. I try to play it safe. I try to practice what I preach. But when it comes to the big dollar amounts, I put that in the hands of the professionals. We talk about it. I know their strategy. Sometimes I tell them to wait a week just because I feel like I have those spidey senses covering the markets like I do. But most of the time I let them do their thing, and then we evaluate it every quarter. And that's how I do it. And it's comfortable for me because I'm really busy doing what I do. And if I think I can outsmart the market, I'm going to wind up just where I was when I was, whatever that was, 40 or 38 years old, and making that bad bet on Lehman Brothers.
It's almost one of those lessons that you have to learn firsthand to truly believe. And those who somehow believe without learning it themselves, their accounts are probably far better for it. So thanks for sharing that. Caleb, what does being a long-term investor mean to you?
That is one of the hardest things for people to grasp because we do have this fear of missing out. We watch the markets all day long, and the financial media, present company included, sensationalizes it so that every day seems like the Super Bowl pregame and kickoff and the halftime show and the closing bell and markets up, markets down. So that horse race gets us into that near-term trader mentality, that near-term investor mentality, and to be able to break that and think, I'm 51. I know I have a good 20 at least years of investing in front of me. And I've seen what the last 20 years have been like. Being able to go long term and hang in there and stick to your strategy as long as you're comfortable with where your risk is and where your allocations are. And you feel like I can withstand a 10% drawdown, a 20% drawdown. I still have time on my side. That's super powerful for people who are trying to be long term. But it's really hard to have that perspective. So it's almost like you have to chain your hands to the desk sometimes and not make that trade. And I'm like everybody else. I was tempted to trade out of all my portfolios in March of 2020 and April of 2020. I was ready to go to cash. Thank God I didn't. That's what being a long-term investor is about. What's your threshold for a drawdown? What's your time horizon for staying in the market long term? And are you comfortable with where you are today and where you think you're going to want to be 3 to 6 months from now? That's the thing I try to teach, to make myself do every time I look at my portfolio. And so far, so good. Anything can happen, but I also feel like even though I'm in my young 50s, I got time on my side, and that's what being a long-term investor is. The magic of time, the magic fairy dust of compounding, and that patience to sit there and wait it out. Those are the key ingredients to becoming a long-term investor and being a successful one, and that's what I hope to be.
Great stuff, Caleb. Again, thank you so much for joining me. I'm going to share links to everything in the show notes, but where can my listeners and viewers find you?
Yeah, I am easy to find. I'm on Instagram at Caleb Silver, on Twitter at Caleb Silver, at Investopedia. We're all over TikTok. We're all over Insta and Facebook and LinkedIn. That's the first place to find us. Come right to our site. We're happy to have you come in. But also, I do have those 2 podcasts. Thanks for mentioning those. The Investopedia Express, that comes out every Monday morning. It's the Express, so it's like a 30-minute quick train ride that gets you set up for the week with a smart conversation. I'm going to have you on that soon, Peter, so prepare yourself. And then we're just launching the Green Investor powered by Investopedia because we know there's so much interest in ESG, in people wanting to invest along with their environmental consciousness. That's what's launching in the next couple of weeks here. So that's where you'll find us.
Well, thanks again, Caleb, for all of that. For all of you watching or listening, thanks for joining us. And until next time, to long-term investing.